What are cycles? And how do they relate to cryptocurrency trading and investing? Now, before I get into that aspect of cycles, let me just spend a quick couple of minutes going over essentially what cycles are. Being able to understand what a cycle is going to be very important for the upcoming discussion on how cycles are measured and tracked and how we trade cycles within the crypto space. Now, essentially a cycle, it really is an event. It's an event that has occurred in a cyclical manner. And when we have a string or repetitive pattern of events occurring over a consistent period of time, then we essentially have a set of cycles. Cycles really are, for the most part, about time. More important than the event itself and the severity of the event, for example. A cycle is first and foremost a measurement in time. So as what cycles attempt to accomplish is they attempt to understand the cyclical repetitive nature of a given event. And a good example of what a cycle is, because cycles really are everywhere, fully intertwined within our lives. But the one that is fairly obvious and immediate to us is the cyclical nature of the seasons and the weather patterns that we have. And we're very familiar with the repetitive and consistent nature of those events. And being able to understand when, from a time perspective, certain events are going to occur, like in the seasons, and then deeper dive into each event. So each cycle, for example, when the rains will come in certain areas based on the seasons, or when we may have storms in the US for hurricane season in the summer months. Being able to then understand these cycles and what events may occur really gives us an advantage, because we then have some predictive capability in understanding what may be coming up. Now you can see thousands of years ago being able to understand the weather patterns and when the equinox, for example, is going to occur. Being able to understand these cyclical events was very important to their lives. Now, to us, and what we're doing here today, being able to understand that financial markets, being that they are influenced by the collective body or the ecosystem of that asset class, being able to understand that as humans we influence certain assets in certain predictable ways that cause an ebb and flow of sentiment towards that asset, which results in the fluctuation in price. Being able to understand that cycles occur in financial markets gives us also a similar ability in being able to potentially profit from the future behavior of that asset class, when we know that in the past it's behaved in a cyclical manner over a given period of time. So we are taking really what is a study that occurs really throughout humanity, and being able to understand that assets like the stock market, the gold markets, and definitely Bitcoin as well, have and do show very clear examples of moving in a cyclical ebb and flow manner. And this manner, or this flow, really represents the sentiment behind the asset class, how we flow from bull to bear markets in a longer time frame, and in the shorter time frame, how we go through shorter periods of sort of this levels of extreme excitement, leverage, to fear and panic and selling, and extreme price lows on a shorter period of time. So being able to understand that and track how a market has formed these ebb and flow price movements over a given period of time, and then being able to look at that flow and then understand that there's a good chance that if we can appreciate the ebb and flow nature of that asset class, that we will then be able to look forward and predict when the next price low and the next price high in that asset class, based on its historical ebb and flow nature over time, is really an important tool and predictable tool that we can use to help profit in this market.